what the situation is, the very first step in becoming a homeowner or in making any major life change, right, is seeing yourself doing it. You got to believe that it can happen. And like I said, buying a home is a complex transaction, and so requires some discipline. It requires an investment of time time and effort. And part of that effort is educating yourself. So, if you would, Gina, if we could go to our next screen. Okay, so we're going to cover some basic topics, and some of them will dig into a little bit more than others. Um, Again, if you have any questions, you can feel free to add them in the chat, or we're going to take some questions at the end. I have some information I want to share with you that's going to help guide you in this process, and we're going to share that information with everybody by email after the presentation is over. So what we're going to take a look at today is owning right for you, right? Because that's the very first decision you have to make. I think for the most part, that ownership is positive for most people. Certainly, like anything else, there's some pros and some cons, but overall, ownership tends to have more advantages than that. And then we want to take a look at owning versus renting a home, the do's and don'ts of buying your first home. And as I said before, we have a handout on that hopefully I'll be able to share with you guys. Um, we'll take a look at what to expect from your lender and steps that you need to get started today, along with some frequently asked questions. So we're gonna, I think we're scheduled for an hour, so we're gonna, just try to focus on the things that may be of the most interest to you, and hopefully I can make the presentation a little interesting and not too boring. So if we could, let's go ahead and get started. The next screen, please. Okay. So as I mentioned, it's owning right for you. Some of the advantages of owning a home is one, the opportunity to build equity. And if you're not living under a rock, you're hearing every day about how, in particular, the African American community doesn't have nearly the amount of wealth. In fact, we have about $1 to every $10 of wealth that the general population has. So owning a home is one of the first steps in terms of building wealth and building generational wealth, right? So because a house is something that you can pass on to the next generation, or even if they don't keep the house, they can sell the house and use that to buy another home. So very important aspect of home ownership is that building equity, because when you're renting, of course, you don't own anything at the end of that. So it's good to have a roof over your head, but we want to go to the next level and build equity. Also, gaining a sense of community. You'll notice that when people own something, they take care of it better. And I think we all want to live in the best community that we can afford to live in. And so when you own something, again, there tends to be a mindset where you're concerned about your neighbors and you interact with your neighbors for the good for the sake of the common good, because we're all in this thing together, right? When we live in a neighborhood. One of the next advantages would be you're free to decorate and landscape to your taste, right? So when you're renting a house from somebody, the landlord's in charge, right? So if you want to paint that room pink and purple, you got to get permission first. But when you own the property, you're in charge. You're in charge of lawn decorations. If you want to put the gnomes out front in the lawn, or you want to put big sunflowers in front of your house, you can do that if you want to, because you're the boss. And you're not dependent. You're not dependent on the landlord for repairs or maintenance. You don't have to wait until the landlord gets around to fixing something if something goes wrong. Of course, on the flip side of that is that you're it. You got to pay the cost to be the boss. So something goes wrong, it's up to you to take care of it. And then last but not least, there's potential tax benefits because the money that you spend on rent doesn't nearly give you the tax benefit as what you get when you're the tax benefit you get when you're a homeowner. So if we could scroll down just a little bit, Gina, renting. As I mentioned, you have little or no responsibility for maintenance and that sort of thing. So I guess you could say that's an advantage of renting a home. Uh, we're not going to spend a lot of time on this screen. It just shows that at the end of the day, over a 7-year period, we took an example of somebody who owns a home and somebody who was renting a home. And at the end of that 7-year period, in our scenario, the person who owned the home came out almost $70,000 ahead of renting a home. So I think most of us would admit that's not just a little bit of money. That's a significant difference. And then you think about every 7 years, if you're making a difference, $70,000 or even $50,000 every 7 years, how that adds up and why it's so important to make the effort to become a homeowner if it's right for you. Okay, so next screen, please. Okay, so let's talk about some of the behaviors, some of the things that we need to do in order to position ourselves to buy our first home, right? Okay, so the first one, of course, I like to think because I'm in the business is you got to get pre-qualified for a loan, right? Because you can go around looking at houses, and I enjoy doing that myself. But if you're talking about actually buying a home, you want to get pre-qualified so you can have an idea of what you can afford. And you need to get an opinion from a professional. And then also by getting pre-qualified, you show any sellers of the property that you're a serious shopper, and you know what you're looking for. And then if you're out there, again, looking at homes, there's nothing wrong with dreaming a little bit, but you want to focus your time on homes that you might actually be able to buy, right? So again, the pre-qualification is a very important tool, very important first step in home ownership. Okay. Um, and then we have to think about what we need and what we want, right? If are you buying a house just to stay there forever? Is this your forever house, or you're buying a house until the kids grow up and move to college or move on? Or are you buying the house and anticipating to maybe get a job or move in with a family member? All those are factors that go into trying to decide how long you're going to be in a home, because that determines how much you want to invest into that home, right? Obviously, if you're not going to be there very long, you might not want to be as picky about the type of house that you're buying at that time, knowing that you're going to move on and possibly buy another home in the near future. So it's important to communicate those needs to your real estate agent so that they can use their professional skill set to help you in your efforts to become a homeowner. Okay, so we could take a next thing, and I'm going to ask you guys to give me one quick second here. Okay, sorry about that. I'm back. All righty. So, in terms of the process of buying your home, one of the things you want to do also, in addition to getting pre-qualified, is you want to shop for the loan. A loan is a very large investment on your part, and just like any other investment, you want to take some time out and shop around and talk to a variety of lenders. And I'm not shy at all about suggesting that to people, because I like to think that I stack up pretty good against the competition, first of all, and then I just think it's a very good um, it's a very good idea, again, to shop around and make some comparison. Not all mortgages, not all loan officers are created equal. So you may get different information from different loan officers. So or from different banks. Different banks may have different programs. So take the time out to shop around for a loan so you can understand the best loan program for your own personal situation, because we all have different things going on in our lives. So in addition to that, you want to get your finances in order. Got to get the paperwork together, right? A mortgage is all about gathering the paperwork that the lender is going to need, because you can have a great story, you can have a great business going on or a great job, but if you can't provide the documentation that the bank needs in order to make a decision, then it's going to be impossible for you to get the loan approved. So you want to make sure you got your tax returns in order, your bank records. You have to show where the money's coming from when you're buying a home, and also your credit reports. You want to show that you have a history of being responsible with your finances. Typically, what we look for is a 2-year period where you have stable income. You can show that you paid your bills on time via your credit report, and that you've taken the time to save, or you've taken money from some verifiable source in order to take care of your down payment, your closing costs. And along the same if I can get you guys to mute. Along the same lines there, as far as shopping around and that sort of thing, is learn about the home buying programs. There's a lot of national programs, state programs, local programs that can help you with the process of getting yourself in position. Everybody's not good with paperwork, right? So maybe you need some professional assistance. There are nonprofits out there that charge either no fee or a very reasonable fee to help you, to help guide you in the process to becoming a homeowner. So you want to take advantage of those as much as possible, or as much as you may need. The next screen, please. Okay, use a real estate agent. When you're just getting an idea of where you might want to live, and just want to see what's out there, it's fine to just go online and look up houses and drive around on your own. But when it comes time to actually hunker down and engage the process of buying a home, you want to use a professional real estate agent, somebody who knows the business, and somebody who's most importantly going to be committed to helping you. That's very important. That person is going to be like your field guide, and they're going to take you by the hand and help direct you in the right direction, so that their home buying experience is as effective and as convenient as possible. So one of the things you could do is ask your friends and family, co-workers, people that you know and trust, or whose opinion you respect, for referrals. That's a great way to find a good real estate agent. You want to make sure that the real estate agent that you work with is an experienced person, and that they have a commitment to helping you, in your journey to become a homeowner. Pardon me, and that they're a full-time agent. And so again, real estate agents, very important part of the equation. They know the market. They can tell you about things that you might not know, things that are going on. that are upcoming that can help you make a better home buying decision. Okay, and I would suggest, just like with real mortgage companies, you interview or talk to several real estate agents to make a decision about who's best for you. Next screen, please. Okay, hiring a home inspector. Now, this is not the same thing as getting appraisal. A home inspector is you pay for it out of your pocket, and it's a professional that knows the construction kind of, if you will, side of the business. They know how to look at a furnace. They know how to look at the foundation of the house. Check everything to make sure it's in proper working order and whether or not it's up to code. So buying a home is expensive enough as it is. You certainly don't want to buy a home like buying a lemon of a car. You don't want to buy a car and then have to do a bunch of repairs, unless you know that's what you're getting into. But hiring an inspector can help you prevent any unexpected problems and expenses. Okay. So, and then that inspector, that because you're hiring that person, their only job is to look out for your best interest. I see somebody with a hand up. Is there a question?
Yes, I wanted to know what obligation the seller has on giving you accurate information of the status of the house at the time. Like, they have to provide. Do they have to provide you with any kind of report or any kind of if anything's wrong with the property?
I know. Well, I'm not a real estate agent. I was a real estate agent a lifetime ago. In fact, I started out as a real estate agent over 20 years ago. But I do know that. So I don't want to speak to that, legally or from a technical point of view. But let me just share my experience. Along with the purchase agreement, there is a form or a part of the purchase agreement is a form known as a seller's disclosure. And the seller is responsible for disclosing any known defects or problems with the house. And that's actually part of the contract. And that's why it's important to have a good real estate agent, because they'll make sure that your sales contract has everything in it that's needed in order to protect your interests. So there is, again, I would suggest is that you talk with a real estate agent, talk with a real estate attorney. But I can share with you that a seller does have a degree of responsibility in terms of disclosing what the condition of the house is. So hopefully, does that answer most of the question that you had? Okay, so we'll go
Yes.
ahead and move on. Okay, all right, thank you. Thank you for the question. And again, having a good real estate agent, having experienced people around will guide you in the right direction. And one of the things that you want to do is you want to request that the seller pay for a home warranty. And that kind of gets to the previous question, right? If there's a home warranty and let's say there's a problem with the house, a warranty can help cover against unexpected, failure of appliances or home systems. If the central air goes out or the roof goes out, those things are very expensive. And as I mentioned, getting into a home is expensive itself. So you want to do whatever you can to protect yourself and make sure that your transition into owning a home is as smooth and worry-free as possible. All right, if we can go on to the next screen. Okay, so kind of in summary, some of the things that you don't want to do in terms of buying the home. We kind of focused on the do's, but there are some things that you definitely don't want to do. And one of the things that you don't want to do is don't rush. Buying a home for most people is the largest transaction that they will make in their lifetime. So you want to take your time finding the right home that fits your situation at the time, keeping in mind that your situation might change. You know, you may be at this stage of life where your family is growing, and but for right now, a 2 bedroom might work for you, you know, and rather than pay rent, you buy the 2 bedroom. And when the family gets bigger or the in-laws move in, right? Um, then it's time to look for a bigger home. And then that home becomes the perfect home for you at the time based upon your situation. So don't rush. Try to take your time. And it's often better to pass up an opportunity that you don't feel certain about than it is to maybe, you know, take the chances that you missed out on something. You know, something usually taking your time, you know, pays, you know, it pays dividends in the long term. And I just find that, again, from life experience, that when you rush and make a decision, especially a large decision, um, sometimes the consequences can be, you know, very severe, and end up costing you a lot more than the little bit that you gain by rushing into a deal, especially a real estate deal. Okay. Don't negotiate without your real estate agent. That person is an agent. That means they're representing you. You want to have a real estate agent that you trust. That's why that process of selecting a real estate agent is so important, is because that person is going to be the professional. They're going to be the face of the transaction. And, you know, trust that real estate agent to do their job. And if you don't trust the real estate agent to do the job, find another real estate agent. Um, don't buy more house than you can afford based upon your current salary. There's nothing wrong with looking forward to the future to do better. You know, we all want to do that, but you want to make a decision right now based upon right now money, right? And you don't want to buy a house, you know, get excited. And it's exciting buying a house, you know. But you go see a house, and it's like, man, I really would love to have this house. And I'm doing a lot of overtime, you know, or I got that second job, but you know, things can change. So you really want to be careful about getting into the transaction and making sure that you can afford to pay for the home that you buy on your current salary. Okay. And don't underestimate competing buyers. Because if there's a house that you see that you can afford and you really want it, sometimes you know you got to pay for what you want. So if you take the time out to do all of these things and you find a house that you really like, give a fair offer. You're not always going to get a great deal, quote unquote, on a house. There's nothing wrong with it, but just keep in mind the real estate market is very competitive. In fact, there's a shortage of homes right now. So if you come across a house that meets most of your criteria, make sure you make a strong offer. And don't be afraid to ask questions about the condition of the house, the history of the house, why is the seller selling the house, all of those things. When was the furnace last replaced? And, you know, when was the roof last repaired? That sort of thing. So ask, if the question comes to mind, ask it. There are no bad questions except for the ones that you don't ask, right? And uh, um, along with that, again, and going back to the beginning where we say don't rush, you know, don't feel pressured to make a decision though. You are engaging in a very important transaction. So, you know, get your ducks in a row, but don't feel pressured. If you don't feel comfortable, it's probably better to take a step back. And if that house is for you, or, you know, then I just believe that things will work out the way they're supposed to work out. So, you know, you want to make a solid decision. And um, this is one of the biggest things that I encounter is that, and sometimes it can't be helped, but you don't want to open any additional credit accounts when you're in the process of buying a home. And because cars are so expensive now, oftentimes a car note or a new car note can make the difference between whether you qualify for the homes that you want or whether you don't qualify. So, you know, it takes a little discipline. Um, you have to prioritize becoming a homeowner in order to be successful in the process. All righty, we can move on to the next screen. Okay, so let's talk about some of the things that you can expect from your lender. And first and foremost is determining whether or not you can afford the home, right? Whether it's affordable. And you may have heard the term debt to income ratio, or DTI. And what that is a measurement of how much of your pay is going to cover the price of your home. Sorry about that. I got to pop up. It's going towards paying your mortgage, your car, a car loan if you have a car loan, credit cards, student loans, utilities, all of those things. Let me go back on that. Utilities aren't included in your debt to income ratio, along with things like car insurance, cell phone bills, that sort of thing. But when it comes to affordability, because everybody's situation is different and what your lifestyle is and what's important to you may be different from someone else, you have to also be careful and understand that where you are in terms of what's comfortable for you in terms, buying a home. And the bank may say, well, you can afford a $200,000 house, and you qualify for this mortgage to get that home. But then let's say you buy a home in that price range, and you're not really comfortable with it. You're thinking, oh, I kind of wanted to buy something more affordable, but they said I can afford it. Well, guess what? The bank's not responsible for paying your bills. You are. So you have to be very careful. Sometimes offers get extended that aren't necessarily in your best interest, and you just want to make sure that whatever mortgage and house note that you take on, that is something that fits into your lifestyle and in your budget, which only you know how much money you're going to spend on entertainment and vacations or helping out a family member, those sort of things. So and those things are very important too. So look at the whole picture. I guess it's the best example that I can give for that. We have an example. Let's say, for instance, a person brings home, a couple, and they bring home $5,000 a month. Typically what we look at is about 28%, well, let's just call it 30% of your income can go towards the actual house. So that means if you got $5,000 in income, you can afford $1,500 a month in house payment. And then we take a look at the house payment plus your other debts, again, excluding things like utilities and car insurance, but your actual other credit obligations. And typically you can get qualified for up to 40% of your total income. So that would be $2,000 a month. So in this scenario, let's say if you're bringing home $5,000 a month in your family, the house is affordable at about $1,500 a month, and all the other bills, all the other credit bills shouldn't add up to more than $2,000 a month. So that gives you an idea of how lenders take a look at, what's affordable for you or not. We have a question in chat. Gina, do we want to go through the presentation and come back to chat messages, or do we want to go ahead and address the chat messages? I can do it either way. Tell you what, we'll come back to chat messages at the end, and that way we can address them all at one time. Let's go ahead to the next screen, if we could, please.
Okay, great. I'm holding on to that question for you.
Okay, thanks.
And you all can put your questions in the chat, and we'll address all of them at one time during the Q&A.
All right. Okay. More of what to expect from your lender, because after all, again, this is a big deal, right? So, you may have heard the term tax escrow or proration. So, what that means is because taxes get paid at a certain time of year, and buying a house doesn't necessarily fit into that same time frame, a portion of the taxes have to be collected at the closing so that when the taxes come due, there's enough money in the escrow account to pay the taxes. And what the escrow account is basically a savings account that the lender has for you that you pay into every month. So again, at the end of the year or when the taxes are due, the money is available. And typically that happens in a situation where you have less than 20% down. Because if you got 20% down, the lender figures, well, this person's got a lot of skin in the game, and they're not going to, lose this house because they didn't pay the taxes. If they're in a position to be able to put 20% down. So, but if you have less than 20% down, then the lender wants to make sure that no matter what, those taxes and insurance, I heard a story just the other day about a guy who owned his house. I think he inherited it, and he owned it free and clear. And then he went to try to get a loan, and come to find out, he didn't have any insurance, and the house was worth over $100,000. Now imagine if he had a kitchen fire or if a neighbor's tree fell on his home, he could have been totally wiped out. So taxes and insurance are items that the lender will typically keep an account to make sure that those things are paid, because they affect the collateral, which is the house, in a very important way. Also, an expense that you can expect is that you have to pay for your homeowner's insurance, which we just talked about, 1 year in advance. And that way the house is always covered. So you pay for the homeowner's insurance at the closing. The house is covered for a whole year. And over the course of that year, you pay a portion of that premium every month into that escrow account. And then at the end of the year, the lender takes that money and they put the house, they pay off the homeowner's insurance. And then you start to cycle over and over. So the house is always insured because you've got a 1 year, your insurance is paid for a year in advance. So we want to stay ahead of the game when it comes to insurance, right? There's processing fees. Those are just, it's expensive to buy a home. It's expensive, guess what, to be in the mortgage business. So typically lenders will charge you a processing fee, underwriting fee, documentation fees, and that's why it's important to shop around. Title fees, the title work makes sure that the property is owned by the person who's claiming they own the property. So it would be the seller until you buy it. And then once you buy it, then you have to have title work to prove that let's say you want to sell a house or get a loan, you want to make sure that you have a good title to that property and that there are no liens that are not known on the property. Construction, maybe somebody had home improvements and there was a dispute and they didn't pay the contractor, and the contractor goes and puts a lien on the house. Well, we want to make sure all of that stuff is resolved when you go into buying a home so that you're getting a nice fresh start. Some lenders will charge an application fee. That's self-explanatory, along with an appraisal fee. The appraisal is a report that basically in great detail, based upon the condition of the house and other homes in that area that are similar, what the value of that house is. And we call that fair market value. So the appraisal determines what that is. And that's a person outside of the bank who gets paid to go and prepare that report. And then in addition to that, you'll need earnest money deposit. And basically that's your upfront money or your good faith money. It used to be called a good faith deposit, in fact. You may hear that term. And so when you make an offer on a house, you have to prove to the seller that you're serious. And that's by making a deposit. And so that you don't just walk away, because that seller is depending on you to make a good faith effort to go through with the transaction. And they may miss out on selling the home to just to someone else, without having something, in place up front to prove how that you're serious about buying a home. Okay, we can go on to the next screen. Okay, so let's talk a little bit about mortgage programs. Um, One of the most important aspects of a mortgage is what type of rate is it. So there are basically two types of mortgage programs. That is a fixed rate program, and that's where the principal and the interest are locked for the life of the loan. So your payment is always the same the whole period of time. Because that interest rate doesn't change, and so the mortgage company calculates at the very beginning how much it's going to take to pay off that house over the course of 30 years at that interest rate. We do it. That's called an amortization schedule. And then you have an adjustable rate mortgage. And just like the name would suggest, is that interest rate typically is lower than a fixed rate, right? Because the bank can adjust that rate from time to time based upon whatever the terms are. And there's a whole slew of adjustable rate mortgage programs out there. Rates have been so low that adjustable rates kind of fell out of favor. But when the interest rates were 10, 12%, a lot of people opted for adjustable rate mortgages because you might get a rate, half of that. It's just that you have to be prepared that the rate can adjust based upon the economy and whatever the terms of that rate may be. So very important to know what type of loan you're getting into. Are you getting into a fixed rate loan? Are you getting into an adjustable rate loan? Okay. And then you may have heard the term FHA, which is an acronym for the Federal Housing Administration. That's a government agency.
Go to grandma.
Okay, are we back? Are we okay? All right. Thank you for putting that on mute. The FHA is basically a government agency that's charged with encouraging home ownership, and they help with lower down payments. They help with credit flexibility, expanded debt to income ratios. So they really try to help people who might not be able to get a conventional loan have an option to still be able to buy a home, because again, it's the American dream. It's a big part of being able to move forward in life, is owning a home. So certainly a very valuable program that you might want to take a look at when you're making a decision about buying a home. And then if you happen to have served our country as a veteran, you may qualify for a VA loan. And VA loans are backed up, instead of being backed up by the FHA, they're backed up by the Department of Veterans Affairs. And they're available to military service people, reservists, and oftentimes family members of a veteran. So it's a great perk of having served the country. So if you've done that, or you have a family member who's close to you, you may qualify. They typically have very good terms. One of the things that they do is they will finance 100% of the purchase agreement. So you don't have to have a down payment with a VA loan, and you can get the seller to help pay the closing costs. So great perk if you have it. Next screen, please. Okay, so this is the call to action. How do we get started today? Okay, so step number one, get your finances in order. Make sure you're paying your bills on time. This is the best thing that you can do when you're trying to qualify. Credit. It's the name of the game. I remember my a parent telling me when I was younger, your credit is like having gold in the bank. When you need money, you can get it. So guard your credit, jealously. You know, it's a very, very valuable tool, and it's very important to make sure that you pay your bills on time, because that's, you know, the bank is loaning you money. They want to know that you're the type of person that you're going to pay your bill on time, because the system depends on it. You want to inspect your credit reports. You know, you're entitled to a free copy of your credit report from each bureau. There are 3 credit bureaus every year. So you want to make sure that you take a look at your credit regularly, make sure there's no errors, make sure that the information is accurate, because it can affect your ability to buy a home and get a mortgage. So you just want to keep an eye on it and make sure you know what's going on with your credit. Save for a down payment. Saving is a very important part, again, of becoming a homeowner, showing that you have the ability to go beyond um, just paying your bills, you know, every time you get a paycheck, living paycheck to paycheck. When you become a homeowner, you need to be able to save a little bit of money at least, because you're going to have some expenses. You know, you got the maintenance of a home. Things get old, they break, you know, you want to make them better. And you may get an assessment from the city. You just don't know. It's very important to demonstrate to the bank that you have the ability to save money, and that you're in a position to be able to buy a house and take care of your mortgage when you need to. And then you need some money to show up front to the bank that you're committed to the transaction, because the bank is going to loan you most of the money, and they want to see that you've done your part. So save for a down payment. Even if you think you're going to get money from somebody else, maybe a family member, as a gift, there's absolutely nothing wrong with that. But you want to show a pattern of savings. Bank look at that, and it's a very important. Gather your tax returns. We talked about that earlier. Make sure you got about 2 years worth of tax return. If you haven't been paying your taxes and you want to become a homeowner, you need to start paying taxes. That's just, you know, that's just part of the requirement. So you want to make sure that at least your last 2 years are complete with your W-2s. Collect your bank statements to show that you have good account management, that you take care of your that you're financially responsible. You take care of your bills. You don't have bounced checks. You're saving money. Bank statements tell a lot about your financial picture. And then take a home buyer education course. There are several courses out there that are available. A lot of them are free. They're offered by nonprofits. They're offered by some government agencies. Some lenders even offer them. So take a home buyer education course as part of your education process and becoming a homeowner. Like anything else, think of it like driver's education. You know, before you can get a license, you got to go through a process showing that you know the rules of the road, and that you're capable of managing a car. Well, you need to be able to manage it, being a homeowner, just the same. All righty, next screen, please. Okay, so we kind of touched on this, but I just want to again, just to refresh, you want to determine how much house you can afford. And another tool we have, it helps you to basically break down your budget. And if you're interested in a worksheet, we can get you a copy of the worksheet after the workshop today, and I'll be more than happy to provide that to you. But basically, it's just a framework to help you look at your finances in a structured manner. You know, how much money do you have? Where's your money coming from? How's your money going out? That sort of thing. How much is the house payment going to be? How much are the taxes, insurance, and those other things that, you know, that go along with buying a house? So very useful tool. You can do it with a notepad and a pen, or you can take advantage of something like this worksheet. So you want to know how much house you can afford. Next screen, please. Okay. And then after you've done those things, go ahead and get pre-qualified. Talk to a loan officer, whether it be myself or one of my colleagues or someone from another bank. Um, the loan officer will walk you through this step of getting pre-qualified. I would tell you what it is that you need to do, the paperwork that you need to get together. If there's anything that's missing, I can give you some advice on what you need to do in order to position yourself so that you can go through the mortgage loan process. Okay. And if we could take a look at the next screen. Okay, yeah, this is the fun part, right? Calling the movers and getting the family together because you finally have gone through all these steps and you found the house of your dreams, or at least your right now house, and it's time to make the dream a reality. So you do those things that you need to do to prepare to actually move into the house. So hopefully we've you know covered all the steps and you talked to a real estate agent and you found a house that you just fell in love with and the kids love the house and everybody's excited, so you can call the movers and get ready to move into your new home and start your life as a homeowner. Next screen. Okay. And in typically a mortgage, buying a house, there are just some common things that come up. Um, we talked about the interest rate and the term on the loan. And so you may hear the term amortization. Again, amortization is just basically a payment schedule. It shows how much of the money in your payment is going toward the principal, the actual loan itself, and how much of the money is going toward the interest. And what happens when the mathematicians calculate the payment, they figure it out so that over time, the house gets paid off in 30 years if you make the payments as scheduled. And at the beginning, because you owe a lot of the money goes towards interest and a little bit goes towards the actual loan. And then over time, more and more of the payment, because the loan is smaller, more and more of the payment actually goes towards the house and less goes toward the interest because your loan is smaller. So if you ever hear the term amortization, that just means the payment schedule and how the loan is getting paid off. How much a frequently asked question is how do I know how much I can afford? Again, sitting down and just taking a look at your finances, we can provide you with a worksheet that would help you. You can talk to some of the nonprofits that are out there. They'll help walk you through that process and explain to you how the numbers work. How does a lender or how does a bank look at your pay stub in order to determine what you can afford? How much of that money that you get in your paycheck they will allow you to put toward a house or toward a car and that sort of thing. So take advantage of the professionals that are out there, because that's part of our job. We don't charge you to do that. We don't charge you to qualify or to counsel you on how to position yourself to become a homeowner. Um, Another question is how much will be needed for the down payment? Well, it depends on the program. There are programs that require as little as 1% or 3%, all the way up to 20%. Of course, the bigger the down payment, typically the better deal you're going to get on the loan. But again, talking to someone who's in the business of helping people achieve home ownership, you gotta gather your information. So the way that you determine your down payment is by figuring out what kind of program are you going to go with and what's affordable for you and what resources do you have available to yourself. And because everybody's situation is different, and this is a a big deal. It always comes back to, okay, so I want to do it. I'm interested. Sounds good. How do I begin? Well, you've taken a big step today by, investing the time to listen to me at dinner time and attending this workshop. And hopefully I've provided you with some information that will at least help you, if you're not already in the process, to either start the process and move forward in the process. So I'm always available to talk with clients about their plans to become a homeowner. And I will do the same for each and every one of you that seeks me out, and I will be honored to assist you any way that I can. And
Is everyone else there?
Yes, I can hear you. I can't hear him anymore.
Okay,
Yeah.
let's see if we can bring him back in for question and answers. Maybe he just had a technical difficulty, so just give me a moment.
as opposed to renting. So
This meeting is being recorded.
thank you again for your time and for your questions. There was, do we still have the questions in chat? Or did we didn't
Yes,
lose
we
that?
do have some questions, and
Okay, great.
please
So
feel free to put your questions in the chat and also to raise your hand or just let us know if you have questions, because we're going to open it up now for
okay.
questions. So the first one is, what if you are not paying rent because you're living with family? How does that change your chances of getting a loan?
Very good question. Can you give me 1 second to just my mouth's a little dry from
Sure, take a quick
talking
break.
for,
Okay.
for an hour. But just give me just a chance to grab a quick drink of water, and
Beverage.
I'll be
Sounds good. We'll
will be
take
there.
just like a 1 or 2 minute break, everyone, and come back for questions. We thank you so much for coming out to the Disability Network, Wayne County, Detroit. And we would like to know more about you. And if there are any services that we can assist you with, we do have your emails and your telephone number. And so what we'll do is we'll be sharing with you all of our services and our events. We do have a really great event that's coming up. I'm going to pull that up for you while we wait for him and share that with you. Give me one moment.
While they're both looking for something, can whoever the two people named with Rakisha Odom, can you either change your name or put your real name in the chat so we can know who's all here, so I can make sure you get this information?
Yes, we do have another person that says Rakisha Odom. If you could share with us what your name is, that would be great. And then we have another person by the name of Darlene, if we can get your last name too. So I just wanted to share with you that next Tuesday, we'll be hosting a really nice program. We'll have food trucks, music of classic soul and R&B, card and table games. We'll be playing Bid Whist and Family Feud. We've got lots of giveaways. And this is going to be at Milliken State Park. That's at 1900 Atwater Street. Everything is completely free. The food and the games and the giveaways are all free. And we are going to be celebrating the 32nd year of the Americans with Disabilities Act. So we would love to see you down there. If you'd like to know more information, please take this telephone number down, 734 956-0304. Each and every one of you are invited to come and share this celebration with us and eat with us and listen to good music. We will have chairs for you to sit down and enjoy that state park on that day. And please take this information down so that you can join us. That's one program that we have. We also have another great program that you might know about with Rakisha called the Sun Gardens. And you can go to sungardens.org and I can put that into the chat for you so that you can take a look at that program. Rakisha is doing an excellent job with our Sun Gardens, and that is where people stop by to enjoy the gardens and learn how to eat nutritiously and also build gardens in their backyards. So Samuel Blue is ready to come back, and there he is.
All
So
righty,
let's take
guys. So we can go ahead and wrap up. Hopefully, I can answer your questions. I think we had a question on the table about what happens when you live with somebody, and how does that impact? How does that impact your chances of getting along? So again, that is a very good question because a lot of us are in that situation. It does have an impact, but it's not something that would prohibit you or inhibit you from being able to get along. You just need to be able to explain it so with what we call a letter of explanation, if you go figure, that you're living with family. And so what happens is that the other things in your credit profile become a little more important, right? So if you're living with somebody, and maybe you're contributing to the household. And I'll talk about that a little bit in a second, but to the core question, you're living with somebody, so the assumption is that you have money available that that you don't have to spend on housing because you're living with somebody. And so your credit should be really good, should be stellar, right? Because you've got income available to you that you would normally be paying to put a roof over your head, and you don't have to do that. So all your other bills need to be paid on time, and you need to demonstrate that you're in that you have the ability to save some money, right? Because if again you don't have rent or a house note, you should be able to save some money. So some of the things that we talked about earlier become a little more important. That, along with a letter of explanation, will help you in your effort to be able to get a mortgage loan. So hopefully that
Can you
answers
also,
your question.
Sam, can you also
Yes.
speak on this new idea of perhaps if you have a caregiver or if you have another adult that you're going to be living with or have been living with, and
Yes.
you all may want to get a home together because, times are changing and not everyone that is married are buying homes. You can have a caregiver or you can be a caregiver and purchase a home with them, and you be able to walk them through that on a one-on-one.
Yeah, and let's face it, everybody has different circumstances, and people are combining households. It's the cost of living has not kept up with salaries and wages, right? So people are deciding to live together to share the expense of keeping a roof over their head, right? Be it renting or buying a house. So one of the things that I would like to share with you, because if usually people don't know about this, so they're not prepared. But let's say you live with someone, or two people, or you live with someone, or someone's living with you. What you want to do is that you want to, whoever has the better credit, okay, is the person that you want to be, that should be the primary person, or the main person to get the loan. And so The second person should be the person that is paying rent to that person to show, and then the person that's going to get the mortgage, the person with the better credit, can then say, I'm receiving rental income from someone, and they can use that to help them qualify for the loan. The thing is, you have to be able to show it. You have to be able to document it. So you would want to, if you live with someone, you pay rent or have them pay you rent every month with a check, and we can show canceled checks, or with a money order or some other way. I know people are doing Zelle and PayPal and all that, and trust me, I'm not from that generation. I don't do everything like that, so I don't really know how the documentation on that works with the digital stuff. But good old fashioned paycheck, good old fashioned check, banker's bank check, or a money order every month will show that there's additional income in the household. So, and that doesn't matter whether it's a brother and a sister, or a parent, or two people who just have decided to live together, or a person with a disability who has a caregiver. You can use that strategy to help you to qualify to buy a house and live together. Uh, Also, you should know that when two people go in and buy a house together, and I know it might not sound fair, but it's just what it is, so I'm going to give it to you straight. The bank is going to go off of the person with the weaker or the lower credit score. So a lot of times, if you might have one person who has done well with paying all their bills on time and maintaining their credit, has a good credit score, but they might not have a lot of income. And then you might have somebody who's, maybe a great hustler. Yeah, I know people make a lot of money cutting hair, landscaping, any number of things out there. But because they're in cash business, and just the nature of their business, they may not have the documentation. They may not have the habit of, because money comes and go really fast. They may not be in the habit of paying bills monthly and have built up their credit and that sort of thing. So maybe that person has the cash and the other person has the stability. They have the regular job and they have the good credit score. So you have a person with the cash, just simply, again, with a check, open up a checking account. We offer checking account. We offer free checking account at Fifth Third, and I can help you with that. I refer you to somebody, and you can, or you can get a money order, and you pay the $500 or $1,000 every month to your partner that's going to go on the mortgage. And then that way you guys are working together. Now, obviously there has to be, a good relationship. There has to be, some trust there. But, you're talking about buying a home together. So I'm going to assume that it's a solid relationship. So, and you want to show, you want to show a pattern of 12 months. So, you figure it takes 3 months to buy a house. So for at least the next 9 months, if you want to use that type of strategy, you need to get started sooner than later. And it's one way to transfer income in a way that's acceptable and that the bank will accept. Because again, if it's in black and white, if you can document it, the bank will work with you. The bank can be very flexible in that way. So hopefully that's an idea or a strategy that can help some of you to be able to buy a house.
We have another question.
Yeah,
that is, will a discharged bankruptcy hurt your chances of homeownership?
It is taken into consideration. Obviously, it's not positive. We look at bankruptcy two different ways. And let me start with the types of bankruptcy. There's the Chapter 7 bankruptcy, where everything is wiped out and you're starting fresh. Okay. And then I think it's Chapter 13 or Chapter 11, where you make a payment arrangement. So the key word here is discharged. With the Chapter 7, everything is discharged. The bankruptcy is over, and the clock starts to tick for you. When it's uh, the other type of bankruptcy, the clock doesn't start ticking until after that payment arrangement is satisfied. So it's very important to know what type of bankruptcy it is and when the clock started ticking. A couple of things you want to have: perfect, as close to perfect as possible, credit after the bankruptcy. Bankruptcy is supposed to be a second chance, and the bank, of course, is going to be very concerned that this is a person who, for whatever reason, had to walk away from their responsibilities to make payments, and now they're coming in there asking to borrow a lot of money. So you need to show that the bankruptcy, a bankruptcy can be due to a lack of responsibility. You know, we all make mistakes. We all have, you know, some skills with financial matters, and some of us don't. And then there's a bankruptcy that's not based upon responsibility. It's based upon circumstances. You get into a car accident and you got $1 million in medical bills that you could just never pay, or the plant that you work at closes up, or you get sick, whatever the matter may be. Something that you can demonstrate is not your fault. If you could show before the bankruptcy that you were doing okay, and then after the bankruptcy, you went through a period of time where your finances were not stable, but now that you're beyond that, you're ready to, to engage the process of being able to buy a home. You do need at least 2 years out of a bankruptcy discharged before a lender will consider you. And it says between 2 and 3 years. It kind of depends on, again, the circumstances, but minimum, I would say minimum 2 years out of a bankruptcy. And then again, if you're saving some money, lenders like to see the fact that you save some money because it shows that you're financially stable and responsible. So hope that answers most of your questions about that. And if you want to talk about that, in more detail, feel free to, after the workshop, I'll be, my information, contact information will be available to you guys to reach out to me, and I can talk to you in depth about your, individual situation, and give you some guidance on what you need to do.
Our last question, it looks like it says, how would seniors get started?
The seniors would get started the same way that anybody else would get started. We don't discriminate based upon age by law. So you're looked at like any other loan applicant. We cannot discriminate against you. So you would need to do the same things. It's just that if you're a senior, obviously you need to do it sooner rather than later, right? Whatever it is that you're trying to do. Because we all got an expiration date. So the qualifications and the requirements are the same for seniors as they are for anybody else. And I have people who have gotten loans just based upon their Social Security. It's this tough because, Social Security typically doesn't, pay that much in comparison to, how much it costs to buy a house. But I have people who are receiving Social Security and a pension, or they may have gotten some money, have some money in the bank from whatever reason, a spouse passed away, or they may have inherited some money for whatever reason, or gotten a settlement. But they're managing to survive and take care of their financial responsibilities. Again, it's all, individual. What we need to do is we need to show 2 years that your income is stable, and we need to show 2 years that you've made the payments that you're responsible for um, uh, before we're really in a position to get a mortgage loan. And if there's something, some circumstances that may have come up that we can document, we may be able to work around that. So again, feel free to use me as a resource and reach out if you have a situation you want to talk about.
One more question, and that would be, I recently applied for a student loan this year. Does that also limit your chances of getting a loan?
Doesn't limit your chances. What it does is it counts against your debt to income ratio. And what we do, even though a student loan is in deferment, depending on what type of loan that you get, there's a calculation that we use to project how much the payment is going to be. So typically, it's 1%. So if you have a $10,000 student loan, whether you're making, have to make payments on it or not, we're going to take $100 a month and put that against your what you can qualify for. Okay, so it's like having a bill for $100, even though you're not making payments, because one day you are going to have to make the payments on that student loan. So the responsible thing is to, as a lender, is for us to make sure that when that day comes, that you're in a position that you can afford the loan, because we certainly don't want to see anybody get into trouble when we knew in advance, that there was a financial obligation, down the road. So
All right, great.
hopefully that helps. So yeah. So and in my personal, for my 2 cents worth, for what it's worth, education is probably one of the best reasons to to go into debt or to take out a loan, because it just pays you back several times over. It's been proven over and over and over again in studies that education is probably the number one investment that you can make. So don't let that be inhibit you from or discourage you from your education. Banks do have a way to work with you, and it's just that we have to take it into consideration. So, I hope hopefully that helps answer some of your questions. And if you have further questions, again, my information is shared. Tend to be a little busy, but best to reach me by email, because that way I can get back to you and get back, give my response to you some thought. Or if you just want to bounce something off of me, we can schedule a time to talk. So if you call me, all I ask is that you please leave a message. If you call me, be sure to speak clearly, leave a phone number, maybe repeat the phone number twice, and I'll get back to you. And to avoid playing phone tag, I typically will ask you to just leave a day and a time that you can be reached, and we'll talk about it. I'm available and glad to help any way that I can. So thank you guys for taking the time out this evening, and good luck to you on your journey to become homeowners. And
Absolutely. Well, we want to thank Samuel Blue today of Fifth Third Bank for such an awesome, wonderful presentation today. If you have any additional questions for him, I will be emailing you his email so that you can respond back to him with your personal questions. Purchasing a home is a personal endeavor, and there might be some information or something that you'd like to talk about in private. So we do have that information, and he's more than happy to work with you one-on-one in achieving your homeownership goals. And you're getting lots of accolades here. Thank you for all the information. I enjoyed this presentation. I received a lot of
All
great
right.
tips to apply to my process to home ownership. Thank you for the knowledge. Thank you for sharing. And can
All
you
right.
just also share one more time the
Sure.
down payment assistance that is available for those who qualify as we finish up?
Okay, there are a number of programs. I'm going to start with the one that's just the most spectacular. The state of Michigan, you may have heard the term MISTA, and that's the Michigan State Housing Development Authority. The MISTA loan will allow you to buy a house with 1%. So $50,000 house, all you got to come up with is $500. They will loan you the rest of the money. They're trying to encourage people to buy houses in the city of Detroit and certain zip codes. So they'll go up to $10,000. $10,000 goes a long way towards buying a house. And all you have to do is have 1% of the purchase price, and they'll kick in up to $10,000. So you can cover basically all your other closing costs. So you figure 3% down, another 3 to 5% for closing costs, and another 3 to 5% for your prepaids. That's taxes and insurance. So great program. Fifth Third offers a $3,600 grant. Oh, let me just backtrack a little bit here. The MISTA program is a loan, though. You don't make payments on it, but they have a lien against your house. So if you ever sell that house or you refinance a house, you have to pay off that loan. So it's definitely a great program. It's a leg up, but it is a loan. It doesn't go away. Okay. It's not free lunch. It's just you don't have to pay for lunch until later. I don't know if that's a good example, but now Fifth Third offers a grant. Currently we offer $3,600 towards your closing costs. And if you team that up with we have a special going right now for government loans, that's FHA and VA loans, where we'll cover closing costs for our closing costs are around $1,200, $1,400. So that's almost $5,000 if you get an FHA or a VA loan through Fifth Third. And again, let's say it's going to take $10,000 to buy the house that you want, and you're able to save up $5,000 or even get a gift from a family member for $5,000. Then we're kicking in another $5,000, and there you have it. The down payment money, the upfront money, is the number one hurdle for people to get over in terms of buying a home. So we're trying to do what we can, to help with that. And then there's a number of other programs. For instance, we have a 5% down program. We have a 3% down program, in addition to the grants and what have you. So there's a number of resources available out there. There's nonprofit organizations that we can be looking to see if you qualify for. So again, everybody's circumstances are a little bit different. What you might